Welcome to Empowering Plans, a show dedicated to identifying waste and undue expense in the health benefits industry, discovering ways to maximize benefits while minimizing costs, and empowering employers, administrators, and consultants to emphasize once again the benefit in benefit plan. Today's episode is brought to you by Borislow Insurance, providing insight and strategies for innovative benefits and HR solutions since 1982. Now here are your hosts, the FIA Group's CEO, Adam Russo, Senior Vice President and General Counsel, Ron Peck, and Director Attorney, Brady Bizarro.
Hello, everybody, and welcome to another episode of Empowering Plans with the FIA Group. I'm your co-host, Adam Russo, and for the first time in a long time, it's been way too long, I look over to my left, and I see two ugly faces, not just one. It's amazing. Ron Peck is here, Brady is here, the whole gang is here. It's like listening to morning radio, how it's been 3 months since they had all the hosts because everyone's on vacation. That's how it sort of feels with our podcast. So it's great to have you both here. Say hello, Ron.
Hello, Ron.
And Brady. Say hello, Brady.
Hello, Brady.
I love it when you meet people and the first thing they say to you is, hello, Ron. I'm like, yes, they actually listen to the podcast.
That's
pretty amazing.
It's catching like Ebola.
Folks, ignore that laughter there. We're not introducing him for a couple of minutes, but he decided to, even when I don't want Mark Gaunya to talk, he still finds a way to get involved.
He's haunting the airwaves.
I'm like, don't say a word. We're going to introduce you in a couple of minutes, so we're all going to ignore him for a couple seconds. Really quick, folks, it's 95 degrees in Boston today, but it's a nice 75 here in our studio. And a couple things I wanted to share. You might go, man, Adam's even more hyper than usual. He's more pumped up than usual. What's going on? Folks, I'm going to Cleveland tomorrow. For those of you who watch or listen, you know that I'm an avid fan. And let me just give you an example. My wife, on our 5-year anniversary, I surprised her with our trip. She had no idea where we're going. She was asking me if she should pack a swimsuit. And I'm like, yeah. I took her to Cleveland
the
for
hotel
our 5-year
pool.
anniversary. Okay?
There you go.
And you know what she says to me when we get to the airport? She goes, weren't we there last year? And I'm like, yes, we were. Anyways, about 2 months ago, my wife says to me, hey, Adam, can we go to Cleveland in August?
Oh, that's life.
And I go, those words, can we go to Cleveland, is not something I typically hear from my wife or anybody, to be honest. So I jumped on the opportunity because, folks, you don't know, Hamilton, the play, is actually in Cleveland right now. So, yes. So I was able to work that in around an Indians game, obviously. But we are going to go to Hamilton. And just so you guys know, a ticket to Hamilton and Cleveland, including hotel, airfare, and everything, 2 tickets, all that is still cheaper than 1 ticket on Broadway.
I literally hear Mark Gaunya in the distance looking for tickets right now.
It's a big hit. You guys all know it's a big hit. So speaking of big hits, yes, the person I have on the call right now is a big hit. It's Mark Gaunya. He's with Borislow Insurance. Say hello, Mark.
Hey, Adam. Hey, Ron. Hey, Brady. How are you?
Again, does he not listen?
He just wasn't paying attention.
He's supposed to say,
we're not talking
hello,
about him.
Mark.
Mark.
What?
Hello, Mark.
Thank you.
Go,
there
buddy.
you go. Finally, we got him. Folks, Mark is the co-owner and the Chief Innovation Officer of Borislow Insurance. He's got over 25 years experience. He's a pioneer in our industry. The guy is the man. Just put it this way. I don't need to say anything else other than the fact of 2 things. He wrote a book. He co-authored a book with his partner, Jennifer Borislow, called Bend the Healthcare Trend. It's a great book. I actually read it, 1. And 2, he's a mentor to me. I've learned more from him than probably any other person in this industry, and that's saying a lot. So I want to make sure we welcome to the podcast Mark Gaunya. Mark, how's everything going today, buddy?
Adam, everything's going great, and I'm very honored to be on your podcast, and I'm glad to know you actually read my book. I didn't think you read books, so that's kind of cool that you actually read mine.
You had an audio version, and I listened to it.
In terms of me being a mentor to you, and I've taught you a lot of things, now it all makes sense. It's all coming together.
I was hoping you'd say, hey, Adam, I learned a lot from you, too, but obviously he didn't. I mean, you notice that did not come up?
Either
I
that
learned
or
a lot from you, Adam. I have.
Don't tell people you learned from me. I don't want you to admit that, but
hey, Mark,
heck,
I guess
what I've learned from you I can't say on air, so
Hey, there you go. Keep it between the book pages there, buddy.
That's exactly right.
Get the Amazon score up.
So, Mark,
I'd be remiss, Adam, if I didn't say something about your beloved Indians versus my beloved Red Sox, just so we have a clear state of where things are.
I like
Your team's 61-49 in first place, but they are 18 games behind the Red Sox, who are 79-34. And by the way, the best team in baseball. I'm just saying.
Again, none of this matters. None of this matters until the playoffs count, right? And as far as I know, our starting five is better than any other starting five. Pitching is better than any other starting five. But again, this is a healthcare podcast. This isn't Tribe Town. This isn't TP Talk. Remember TP Talk from the movie Major League? We should do TP Talk.
Absolutely.
Which, by the way, I think we have more listeners now than TP Talk did in the 90s. No question about that. Anyways, Mark, I know that you don't have that much time. I just wanted to ask you a very pointed question. Because, again, if there was anyone that I would turn to, if I was the dictator of America, right? If I was President Trump or if I ran this country, and they go, you can fix the healthcare problem, you could turn to one person. And I turn to you. What is the answer? What is the biggest problem, and what is the solution to that problem in about 30 seconds? Go.
The biggest problem with healthcare is we have a system that wasn't designed for us. It was designed by what I fondly refer to as the four rulemaking entities in our country. The government, big hospital systems, big pharma, and health insurance companies. And they actually created this construct we call healthcare that we all live in. And they do it through they administer it through a process called coding and billing. Now, none of that sounds unusual, but what is unusual, and this is the biggest problem, is that the system has zero transparency. I always ask people everywhere I travel in the country, name one thing you buy outside of healthcare where you don't know the price and the quality of that particular service or product before you buy it. And I always get the same response, just like just now, crickets. That's just not okay. So if we're going to start anywhere about reforming healthcare, really truly reforming healthcare, we have to first make price and quality of services transparent for people so that they understand what they're buying before they buy it.
Wow. Okay. So,
is that a drop the mic moment?
It's kind of like, all right, let's just hang up then. So here's the question, right? We talk about transparency, and obviously we're headed in that direction. One of the big steps towards transparency is that employers are no longer completely dependent on the large insurance companies, like you say, and they're starting to look at things like self-funding as an alternative and a way to at least begin looking at the costs and getting a little more data transparency. And so the question I'd ask you, and this is something that I think we've noticed, and I wonder if as the CIEIO, you're starting to notice this as well. Are you seeing a changing demographic in the types of plans and employers that you're servicing today as compared to a few years past?
Yeah, I would say that we're seeing a much more rapid adoption of consumer-driven health plans, which, by the way, most people don't understand. What a CDHP is, they tend to label it as a high-deductible health plan, and my response to that's like calling a car without an engine. It's just a chassis, right? So at the end of the day, a CDHP is a combination of a lower premium, higher deductible plan, where then you're taking some of that savings and you're channeling it into a health savings account or a health reimbursement arrangement on behalf of employees so that they actually have some skin in the game, a stake in the game to actually care about what things cost. Not necessarily that they'll make a less expensive decision, but at least they'll be aware of it.
So smaller, medium-sized employers, I know in the past they felt like they couldn't engage in that type of benefit plan sponsorship. They were either afraid or not sophisticated enough. Do you think that they're willing to become a little bit more, like you say, involved in the game, or are they still hesitant?
Yeah, I would say the short answer to that is yes, they can get more involved in the game, and I'll label it this way. The two greatest motivators in life, I believe, are pain and fear. Small and mid-sized employers have both. They have the pain of being able to try and make their benefit budget dollars stretch, and health insurance typically comprises about 80% of what an employer will offer in terms of benefits. And it grows 4 to 5 times faster than any other, and that would be the fear part. The fear part would be, I can't afford to continue to pay 10, 15, 20% increases in my health insurance premium every year and still have enough resources to reinvest back into my people and to my business. So short answer, Ron, I think, is that small employers and large employers have been pushed here, small to mid-size rather, have been pushed here, not because they necessarily wanted to be here, because they have to respond to the pressure that they feel on their budget.
Well, Mark, I'm driven by love. I just want to make that clear. That's the third big driver. But speaking of people we all love, Brady, I know you have a question.
Yeah, so Mark, as I listen to you, I think very, very aptly describe the problem in 30 seconds, I couldn't help but think of a political reference, of course, and what I got from what you said is that the system is rigged, that it seems like the big players have sort of captured the industry, and I'm thinking of ways, and I know you're thinking of ways of how we can fight back. And I'm wondering if you can talk a little about your experience. I know your book, and I actually watched one of your videos before this podcast to do my due diligence, and you're talking a lot about wellness and how consumers can be smarter consumers of healthcare, and about employee engagement. So I wonder if you can talk about the different types of what wellness means as you describe it when you're out speaking about these issues.
Hey, speaking of, by the way, before he answers that question, I mean, have you guys seen Gaunya? This guy, speaking of wellness, I mean, the guy's built. He's jacked. I mean, the guy must work out 3 hours a day. I mean, every time I go to a conference, he's in the gym before I get there.
2 years ago, I was 30 pounds heavier than I am now. I was a fat piece of you-know-what. I may be a piece of you-know-what, but I'm not.
I mean, it's a lot of juice. There's a lot of needles, a lot of HGH.
He's healthy.
He's healthy.
That's a secret.
He looks good.
In the gym, Adam.
He looks, like I said, with the help of growth hormones.
It's obvious that you hire bright people. I don't know where you found Brady, but Brady, I don't know why you're working with Adam, but we can talk about that at another time.
Let me know. Yeah, I get my email.
The game is definitely rigged. The reality is, if employers think they're going to change the slope of their spend on health insurance and healthcare costs by doing the same thing they've always been doing, they should look up Einstein's definition of insanity, because that's the world they're living in. At the end of the day, the only way you can really break away from that is to go into being partially self-funded, to actually see the services and products that your people are buying, and then to actually create a culture. And that's what I want to talk about, Brady, to your point, about creating a culture of health and well-being. We moved away from wellness a number of years ago because wellness is really a linear type of thinking, right? It's a walking program. It might be, a let's eat healthy today program. But it's not anything that's sustainable. So what we believe is well-being is really about talking about the whole person, right? In our view, there's 5 elements to a well-being construct in terms of culture. It's physical well-being, it's financial well-being, it's workplace, it's community, and it's mind and spirit. So physical, financial, workplace, community, mind, and spirit. And when you have a strategy that embraces those 5 elements, you can really begin to implement sustainable behavior change. And that's really what we're talking about here. You're not going to solve the problem by just increasing deductibles, giving people more out-of-pocket responsibility, and then saying, you know what, you're on your own, figure it out. You really have to create a culture inside your organization that embraces these 5 elements, so people are not focused on just saving money through healthcare costs. They're also focused on becoming better parts of your organization and a better human being. So we really spend a lot of time focusing on well-being. We spend a lot of time with employee engagement. A big issue in today's environment is presenteeism. People are maybe physically present at work, but their minds are in 16 other places other than what the work is that you've hired them to do. So
sounds like Brady. That's exactly it.
Wow.
Presenteeism. We need to work on that, bud. That's his next review, Ron. Make sure you have that word in big, bold letters.
Big and bold.
Last question I have for you, and it's involving captives. That's really how we got to know each other and how our company started working together. Mm-hmm. Can you give me a little background in regards to what you see as the biggest pros as to why captives are so captivating, but also at the same time, some of the things that maybe people are getting involved in captives that really shouldn't be? Any thoughts you have on that would be great.
Sure, I'm happy to do that. And yes, you're right. I mean, that's how when Captivated Health was born in July of 2014, and you and your firm helped us do all the legal documentation, all the structural constructs, so we could actually create this community. And really, what it boils down to, from my perspective, there is no magic in captives. Okay, I mean, I know people are in love with the whole notion of a captive, even the word they're in love with. At the end of the day, we're not in love with the captive structure. We love what the captive structure allows us to do with and for our clients. So what do I mean by that? If you're a mid-sized employer, right, so you're between 50, so small, 50 to 500 employee lives. When you're out there purchasing health insurance on behalf of your employees, your claims are not credible. So what does that mean? That means when the insurance carrier develops your rate, your insurance premium rates, they are blending your experience with other people and other businesses. You have no idea who's in your pool. So as an example, with a 100-person company, maybe 10 to 15, maybe even 20%, depending on the carrier, of that group's claim experience, in other words, what their employees are buying in terms of products and services, are used to calculate the insurance rate that they are paying. So ultimately that means what? 80 to 90% is for expenses that they're not even aware of. So what a captive does is it allows you to jump out of that opaque black box and move you into the transparent world. Now, when you move into the transparent world, you then begin to see, okay, wow, now I really get a better understanding of where my people are spending money. To your point about should every employer be doing this, the short answer to that question is no. I've never met any insurance product or any funding mechanism where everyone should be a part of it. That said, being in a partial self-funded program, like a captive, gives you the ability, and if you're getting the right advice, which is absolutely critical, you should be asking your advisor to help you understand two things. One, what is our level of risk tolerance? In other words, are we a well-funded business? Do we have a strong profit and loss statement, a strong balance sheet, strong cash flow? In other words, can we pay the bill if we take the risk? If the answer to that question is no and you're running away from cash flow concerns, you are absolutely not a candidate to be in a captive insurance arrangement because you're taking the risk of your employees' claims. Now, the other part of that is suitability. So let's say you check the box on tolerance so that you're able to take that risk. Now the question the advisor needs to help you answer is, should you take that risk? And suitability boils down to, what is the underlying demographic of your employee population? What are the underlying health conditions that your people are dealing with? I can give you one example of a client we had that wanted to come into Captivated Health. They love the principles of the program. They love the experience in the program. They've heard it from their colleagues. Very, very interested in being in the program. But they are also a client of ours in the fully insured world. They consistently have what's called a 125% loss ratio every year, meaning that they pay $1 in premium and they're transferring $1.25 in claims. They wanted to come into Captivated Health, and we did the analysis for them, the feasibility analysis, and shared, you know what, we love the fact that you're engaged and want to be a part of this community and the principles that it upholds. But from a suitability perspective, you have some ongoing large claims that are never going to go away because of the nature of the people that you have working for you. So we would be doing you a disservice to bring you into the world or the community of you're going to take a risk when really you should be in the world of transferring that risk to the fully insured carrier. So that would be an example.
So basically that group had 5 hemophiliacs. Is that what you're telling us?
Pretty much. 5 hemophiliacs, a couple of transplants, a couple of folks that had some really, really bad conditions and they were not going away.
Ron?
Yeah, so Mark, I'll ask you a question, okay? It sounds to me like, and this goes right back to when you were talking about being victimized in the rig system, for a lot of employer, plan sponsors, people who are purchasing insurance, a lot of this comes down to your mentality. And you just talked about that there are a number of different things to look at. There's the mentality, right? So risk tolerance, things like that. But then there's also the actual reality of the employer and their group. And in this instance, you were just talking about an employer who was not necessarily afraid of the risk, but they didn't actually present a very good possibility or potential for the captive. How about the flip side? Can you tell me about an employer who maybe mentally was not prepared, but when you look at the numbers and the population, they were a great fit? And I'm going to give you a chance to do a victory lap. Let me know. Is there an example like that where you finally convinced them to come on board and they've loved it ever since?
Yeah, actually, I could share a story with you. We had one school that we work with who really didn't want to come into the program. We're very what I would call risk averse. So even though they, from a tolerant perspective, when we looked at their financials, they are very well capitalized. The school is very well run. Suitability wise, we looked at it and said, look, you are being overcharged in the world that you're in. Your folks are, the risk that you're presenting to insurance carriers, they're making a ton of money off you unnecessarily so. So this school was reluctant because the mindset wasn't necessarily one that was conservative in nature. In other words, wanted to implement more accountability, personal accountability, responsibility, and frankly didn't want to have their faculty or staff, didn't want to have them spending more time focusing on their healthcare than focusing on the education experience for the kids in the classroom. To make a long story short, they ultimately decided to move into this environment, and as a result of moving into this environment, they've been able to save several $100,000 that would have been insurance carrier profit that now resides in their bank account in the form of reserves that gives them an opportunity in future years to actually enhance their benefit plan. So one example I can give you there is this group's been in for 4 years. They've managed to put away almost $500,000 in reserves. They've been actually able to lower deductibles. They've been able to add more money to their health savings account. They were able to actually hold the line on what they were taking out of people's paychecks. And then finally, they were actually able to add a benefit. So another benefit they added was we did some research or a study with their employee population asking them, if you could have another benefit, what would it be? And the most common benefit recited was they wanted LASIK eye surgery. Well, the client came back and said, the number one thing we saw was LASIK eye surgery, but that's not covered by insurance. To which we said, well, actually, because you're a partially self-funded plan and because you can alter your plan document, you can afford and you can make available to your employee population an additional benefit that wouldn't necessarily be covered by a health insurance carrier, because now you're the plan sponsor and you decide what has to be in the plan. You can actually add, and they did do this, a $500 benefit per eye. And the employees are like, wait a minute, you've decreased what you're taking out of my pay, or held the line on what you're taking out of my paycheck. You've decreased my deductible. You've added more money in my health savings account, and now you're going to give me another benefit to go get LASIK eye surgery? Wow. Does that feel different?
That's exactly what we did here at FIA with acupuncture. We covered it because we realized that people utilizing acupuncture were less likely to actually take on prescription drugs. So, hey, I want to let everyone know our special guest today was Mark Gaunya, the man, the myth, the legend. You get to hear him here on our podcast. As I said before, Mark is the co-owner and chief innovation officer of Borislow Insurance. I can personally let you know he's one of the best insurance advisors in the country. If you want to get to know him, Google Mark Gaunya, Gaunya at Borislow Insurance. The guy just knows his stuff. I want to thank you, Mark, on behalf of Ron, Brady, and myself for joining us here today.
Thank you very much, Adam, Brady, and Ron. I really enjoy working with you guys, and I'll I'll put the compliment right back on you guys. There is nobody better. There is no firm better in this country than the FIA Group. Period.
Speaking of better, just want to let you know I have a feeling that my Browns, and I'm gonna say this today live on the podcast, my Browns will go 2-0 against Mr. Gaugny's Steelers this year. I just feel I got that Browns fever. You know, I mean, we might win 2 games. It'll be against the Steelers, both of them. I really feel that way.
Put a side wager on that, I think.
We can put a side wager on it, but I just want to let our our listening audience know it will be a clean sweep by the Browns over the Steelers this year.
You heard it here first.
You heard that, fantasy?
We have to end it right there, Mark. We can't let you talk anymore. We apologize. But on behalf of Ron Peck, Brady Bizarro, Pat Santos, our amazing producer, and myself, Adam Russo, thank you all so much for empowering your plans with the FIA Group. Have a great day.